Okay, good afternoon, traders. Good afternoon. My name is Raul Rivera. I am the founder of the marketprofile.com. Today is Wednesday, September 20th, 2017. Let's get started with today's trading. And today was Fed Day. And all we literally got out of the Fed was that, hey, we're not going to raise interest rates, but we are looking into the December meeting and pretty much just talking the same talk except for a few key factors. You know, they mentioned this time they're not worried about inflation because the target, the little targets and everything. I'll tell you what, from an investor and trader point of view, what I heard today was pretty much the same. Now, the reaction out of the market, that was not the same. Okay, the market reacted very differently here. We figured the S&P 500, let's take a look here. We figured the S&P 500, we wanted to get long early in the morning. This one, we were trying to get long, as you can see, and that was the area to get long. This one, we didn't get it. I mean, the market did not want to sell below 25.02. I think the low was 25.02. Pretty much early in the session, we determined that, and probably that was it for the rest of the day. It was just pure on a P-shaped distribution on its way higher. Probably the Fed came in and followed by the idea early this morning was that, hey, we know that the Fed isn't going to buy the market in the S&P. Okay, that was the assumption here. The markets that are going to move are the euro, trending up pattern, gold market, the 30-year bonds, consolidation, so on and so forth. Currencies, P-shape equals the dollar, and the dollar trending up pattern, B-shape. Okay, that was the idea. Down, we wanted to trade gold, we wanted to trade the euro, we wanted to trade the 30-year bond. So the idea was to get long. We didn't really want to trade TWAP. The S&P 500, so we didn't prepare for the S&P. Trying to get long at TWAP, and when prices came into 25, absolutely unlucky. This probably would have been said, hell no, the trade of the day for today. So we were trying to get long right at TWAP, right there. 48.76 was the exact number at that time. The very low of that bar, in fact, down to 24.90, possibly to 95. Okay, and which actually 95 to 94 was one of the levels we tried to buy on this day. 48.78, and I was trying to get long. Two simple contracts at 48.76. Monday we tried to buy 95 to 94. Two more ticks. Come on, crude, you could have done two more ticks on that, but it didn't, and then reversed very quickly. That actually happened to be the low to make a high of the day. I didn't prepare for 49.40. This could have been probably the trade of the day, getting long 49.42. Small. So it would have been a spectacular trade, 50 actually that ticks plus trade, but just because of two ticks, we weren't able to saying that in hindsight because it's true. I mean, I'm looking at it in hindsight. I wasn't prepared for this trade. I wasn't looking to take a trade in the S&P 500. After making, and when we take a look here, value area low. So crude oil, literally, the looks like it wants to continue to go higher. This post-hurricane bottom rally, we still have negative balance, and now this is where it goes to show that 45.80. The markets can trade higher, and they can end in the green. Points in just a few simple days. There's where we're currently at. Here's where we close, and it just goes to show the volatility that's in the crude oil market. Prices are above the open, 100 plus ticks. It means that it has a green day, right? Or the candle definitely a lot of opportunity to be had if we're taking a look at a daily bar in crude oil. That usually goes with the assumption that there's more buyers than sellers. And okay, next up we have here to teach you that volume is the most misunderstood. The gold market. This one I took a trade in this market. Perfectly executed. The market doesn't, especially in the futures. The market does not have to sell off in order to find more buyers and sellers. Was also an inside day rally. You can see in order to find more sellers and distribution. Okay. Here, but that's not we rally from the lows all the way back to the highs above the open. From high to low in the previous day. We take a look at the volume imbalance, and we are even right now 12,289 after the market developed and everything. And we're still trading inside, so we were looking for the inside day trade to sell. Then there are before we traded lower to buy. We were pretty much buyers, even though this was the profile that we saw early in the market at the current. So D-shaped distribution. Inside day, we want to be long just below value. We teach this,
short
we
just
teach
above value.
what volume. Now, I didn't want to take a short
like,
because this market is super strong
it's
right
true
now,
meaning
so there's
behind
no real reason for me to short,
in the futures markets, and
but I didn't want to be long, so I had
volume because
two contracts sitting here at 40
interpret this, right?
to 39.
More sellers than buyers,
and I think I made a mistake with this one. I should have gone 41 to 40 rather than
how do you interpret that?
40 to 39.
Right?
I think I just when I was drawing this
hard question to answer.
Green bar, I think
in the trading room we teach you guys
early this morning, probably half asleep, and I put it in the wrong spot, so I missed an opportunity to get long at that area.
We have the tools
after the market came down into it here
in a more immersive way than
40 to 41 would have gotten me long.
Then available
right on that tail.
Certainly in any
traded
other
as high as
so here in the S&P,
46 could have taken a trade
even on just
we
one
were looking
contract.
early in the session,
probably around 8 a.m.
50 ticks, which
to about
really
10
turns out to be about
$500
dollars, even on just one contract. Right?
We didn't get there by that time, so we canceled.
But since we missed that one, I decided to cancel.
Next up,
those
we have
trades there.
oil,
I figured, you know what? If we come back to this low,
we had
more than likely going to trade
today.
lower and probably going to go into this value area here. Switching back over to profile view,
and we had a bias that
we had a value area low.
Be buyers and sellers at the same
time
here,
not that
without
really
any clear direction.
Just happens to be
where we really
coincidentally this value area.
We were looking to sell 50, 70 to 80.
So I took it with a grain of salt, and
at the event,
decided to get long between 38 and 36.
As soon as
you can see, that happens
inventory
to be the
report came out,
of
and
the day, and the markets did trade higher than
49.90.
By the time I took the trade, it was already like
I
115. This market closes at around 130.
It wasn't until
and it's not that it closes, but it
pretty
settles
much
at
until
130.
11 a.m. Which
anything after 130 is
second
trading
bar.
And during post-settlement trading, there's usually
this was the
very
close to that bar.
Type
I don't want to be
trading.
I want to be trading.
So I knew the risk I was taking. And I knew I probably wouldn't get much out of
as soon as the report hits
I did manage to get at least just
I'll
1
10,
point.
15
I had
minutes,
3 points on
but
4
not
contracts.
an entire.
So I got 2 contracts long
after 30 minutes.
I mean,
it picks a trend and it goes with it.
Here, you can see it traded as high after my fill at 40.60. My average, I don't know why the FOMC 37.50, and it traded as high as, dropped 40.60 buyers here at the 3 points I talked about. But I didn't take it off at that high. I actually took it off for 1 point.
No trading was done
here. The reason being, I was looking for a target up here in the 43 to 45 area.
This is.
But on this bar,
Wednesday number 9,
2 o'clock bar, 1:30 to 2 o'clock.
This bar right here that we don't have.
We see this big tail, but this tail was a lot longer. We traded all the way up there and then traded,
which is really
pretty much to make this bar into a doji.
From January,
so I'm like, you know what? It's a big selling tail. I don't want to be part of it, so
let's go all the way. Last year,
I took
until
1 point out of the trade on 4 contracts.
Really
great $400
movement.
So not a bad trade at all.
After
could have been a lot more. Wish it had been
a
lot more.
But straight time where
I'll take whatever I can get.
Pretty mediocre.
It traded. It didn't even trade higher.
Okay, this was towards the end of the bar
in gold, but
at the beginning of the bar, it traded lower and it traded lower by
market profile. I don't just draw lines,
and then
I use values based on market profile.
48, it traded down
low.
60 ticks.
Lo and behold, happens to be the low
50 ticks, and then it traded back up. And then went higher. So it wasn't even after the report.
Finally we got the 30-year bond, and this one
it seems
I
like
had an order here. I
much
canceled
after
it
the report.
Just simply because the market
was
just trading sideways.
As for tomorrow,
I don't want to be surprised later if it
51.
does sell off or probably continue to go lower.
If we can get above 51, we'll probably
me and the 30-year, we have this weird relationship, right?
Bullish.
Where sometimes I'm right on the trade, and sometimes I'm
now that
wrong.
we're above 50
most of the time, I make 0 to no money trading
higher
30 years. So I figured
more than likely
if I don't get in early on a trade, I don't want to get in
next
at
up,
all.
we got gold and
this
V-shaped
distribution here.
Unfortunately,
for most
didn't
of the
come
session
out as the trade that we wanted.
Remember, V-shaped distribution is
we're looking
a
to take
consolidation
really great
pattern.
profits
So
here in this market.
It might be hard to recognize for those of you who are
prior
new
to the FOMC
market profile.
To sell 13, 19 to 20.
Bringing it back to something more familiar, like
candlesticks.
10 to 11. Consolidation. What is consolidation? It's just the market
prior
trading
to the
sideways.
FOMC. We
right? So look at the
ignored
candlesticks.
these two areas.
See how they're trading sideways.
So that's a D-shaped distribution, and then a B-shaped distribution is a trending down pattern.
Further away, at least
here's your trending down
points,
pattern, right? There's your
plus
B,
or minus,
a little bit of consolidation
away
here,
from where the market currently was.
That's your B-shaped distribution.
Try to locate value at those levels.
Software for Ninja Trader 8 is so wonderful. You might not have to guess
the market's
any
reaction there
as to what
that was pretty much the bottom.
All you can do is just
like we didn't have
very
enough time
simply
to really rally.
With a click of a mouse.
Pretty much got caught in one of those situations where we buy the bottom of the day, but rather than moving higher, we're just kind of consolidating sideways for the rest of the time.
Very nice and simple trending down pattern.
We were also looking to sell.
Not looking to get long,
25
down pattern. This would have been the place to get long, but once again, we didn't quite get up there.
We sold off pretty quickly, and this area was okay.
Too late in the day,
in the morning.
Around 1 o'clock,
the market sort of beat me to it,
and I said, it's too late.
The first test of that level happened here.
It's not going to bounce back
5:30 in the morning.
Also, I mean,
and at that time,
they've been selling it all day long, and it's mostly been profit takers. On this day, we traded a lot lower
after the FOMC announcement, and dropped from that level.
Okay,
so what we did, we came in and we wanted to buy 1302 to 1304. We started buying 1302 to 1304. I think my average.
And then on this day, as the market was trading higher,
I actually closed the trade right at
whoever got long here right at the profit taking,
or at around
continued the profit taking
an 8-tick profit.
So you can see we consolidated.
Not really what I was expecting. I was expecting
tons
to take
and
a
tons
target
of institutional
at this prior
selling.
level of support here at 13.
Even if it's selling to close,
looking to see how much further momentum.
And if you sell something, the price of the asset should fall down.
The trade found
so that
bottom,
be
found
another
balance
reason as to why
here,
I didn't want to take this
not
long, especially that late in the day. So far, it closed at negative 15,000 balance. Still, I don't think it's fresh selling. I think it's profit taking. But because profit taking is the same thing as selling, it's not really
a risk
the time to get long
because we're so close to 1300
taking their profits
on a V-shaped distribution,
and they're selling.
So we have
why should you be buying? I think the market
FOMC
realized
announcement
that
gets a drop,
pushed lower,
and now we have a B. So we have a selling pattern.
So that's all the time I have for today.
We're not really looking to sell.
Some of the trades I took for the day.
Excuse me. We're not really looking to buy.
What I'd like to do now is, for those of you who are watching this for the first time,
you want to go long, it's at your
to the website www.themarketprofile.com and claim your 14-day free trial.
Further higher,
you'll watch me trade live every single day for those 14 days, for those 2 weeks.
For some
you'll watch me
profit
trade
there,
live
since we did find
every single one of these markets plus other markets as well.
It's one of those trades you really got to manage overnight and keep an eye on, because
I trade
breaks
the
under
I trade crude, I trade euro, I trade the yen.
You never know what global
the Nasdaq, sometimes
trader
the Russell,
might decide to
and
say,
many other
hey, I'm
contracts.
going to liquidate a big position at 1300.
And also, we get
also
watch
really
me
big swift move to the downside. So we
manage
really
these trades live, real time.
So around that 1300.
You'll watch me. Pretty much, I'll
would just be
teach,
my
and
2
you'll
cents.
also watch me.
We're in a selling pattern.
Use
I'd
the
probably be
indicators
looking to sell, and the
in order to find these areas of value where I
around
want to get long and get short, and
you
I'll
can
also
get started
teach you
early here at
strategies that we use
1310
based on market profile every
but
single
I'd be going
day.
for the 13.
Definitely swing by
to begin
www.themarketprofile.com.
selling.
It's
That'll
free,
probably be a
14
level
days.
tomorrow.
See if this is something that
obviously
for your
if
trade.
it doesn't get hit.
Other than that, if you guys like
it
this
does
video
get
on
overnight, we'll
Facebook,
look for
make sure
levels
you
of
guys click
resistance
like,
at a
and
higher
if you
price,
want to comment,
and we'll be able to
have
find
something to
support,
say, definitely leave that
inside
in
this
the
value
comment
area here
box
that we're
below.
pretty much
I
creating.
hope everybody has a great rest of your day, and I will see everybody again tomorrow. Okay, next up we got the 30-year bond, and in the 30-year bond, same thing. I mean, what happened here? S&P sold off, Nasdaq, Dow, they all sold off. The euro sold off, the British pound, everything against the dollar sold off. 30-year bond sold off, right? It's like everything that was moving higher were the bond yields and the US dollar. Those are the 2 things that were moving higher today after the FOMC. I don't know what else was moving higher, because every single futures contract I look at was trading lower. Pretty confusing, right? If you would think the S&P moves lower, gold moves higher, or if gold moves lower, the S&P moves higher, vice versa. We didn't see that today. All we saw was, hey, we're all going to trade together in harmony. So the Fed kind of threw us for a loop there. It happens. The Fed, I always have this thing about the Fed, like they're a curse to my trading. Every time we have monetary policy week, I either do really good in the beginning and then really bad towards the end of the week, or I just do really bad the entire week. And this week I started off really good, and now I'm kind of, dropping points per se, right? I'm like losing the battle here for this week. We have 2 more days, so I'm not too worried. I'm not down drastically. It's manageable. Here in the 30-year, again, just D followed by a move lower, and we started actually rallying higher, and it actually had a pretty nice move to the upside from the lows. Too bad we couldn't get that same sort of reaction here out of gold. Could have made a little bit of profit, but in the 30-year bond, we were really only looking to short. Early in the morning, we said prior to the FOMC, we want to sell 16 to 20. For the FOMC announcement, we want to sell all the way up here, 55.04 to 55.08. We were thinking maybe we could get 32 ticks to the upside or 32 ticks to the downside from the report. And the report came out at around 154.06, traded down to 153.16. So it didn't quite complete 32 ticks. It was about 10 ticks short of that. But the idea was there, and we tried to find value at those locations, right? And the reason I don't take any of these early ones for the FOMC is because when we have news announcements of this caliber, the markets love to test extreme areas, right? They love to trade super, a lot higher or a lot lower very, very quickly. It's not the same as in a normal market where, if I was looking to sell 155 to 155.08 without a news announcement, people would probably laugh at me. It's like, there's no way the market's going to get up there without any help, right? Because markets move slowly, okay? And they respect support and resistance levels. Traders respect support and resistance levels, especially in the 30-year bond. No way it gets this high without any sort of news help. So that's the only reason I was looking away from the blue and into the gray. Away from the blue and into the gray. Okay, next up we got the NASDAQ, and this was probably the trade of the day here in the NASDAQ. So we were looking, we were pretty much looking at an inside day. We can see here early in the session we had a D-shaped distribution, long below value, short above value. That was the idea. We weren't looking for the short side because the market only wants to buy, so we're only looking for the long side. We had a couple areas of value just under the lows, and we figured, you know what? This might be an okay area to start buying, all right, but at the same time, I canceled orders, right? I canceled orders at those areas because remember what I said about the indices. I don't think they're going to have a reaction either to the downside or to the upside when the Fed announces. And more than likely, we're going to remain in a consolidation pattern until the Fed comes out and starts talking. Okay, so we had a D-shaped distribution. It was around 10 a.m. I decided, you know what, I'm canceling my orders here. There's really no point in getting in. And then came the magical word, the V word. This is the greatest word for all traders, okay? Maybe not for investors, but for all traders, the V word. That's right, volatility. Volatility. So apparently some news report came out. Nobody, everybody's not buying the iPhone 8 or the iPhone X. The orders aren't as strong as they were expecting for the Apple iPhone. And not only that, but the Series 3 watch, the LTE connectivity was having some issues. And it was all, obviously the hardware in the phone, in the watch. So what happened was Apple stock sold off pretty heavily, and the NASDAQ just dropped right down with it. And we were like, whoa, what is going on here in the NASDAQ? I mean, how can one stock take down the NASDAQ this bad, right? We went all the way from 95 to 55, right? We sold off about 40 points of value because of Apple, right? It didn't make any sense. And while we were looking at that drop, we saw that the S&P 500 wasn't even phased. It didn't even affect it. So we came in really quickly, and we're like, hey, wait a minute. Let's take a look at this chart. Let's find an area to get long. We found this value area low here between 57 and 63, and this was a level of support that we were trying to get long on this day here. Okay, we didn't quite make it, not even towards the end of the day, but we made it there early this morning during the Apple news, and we said, I said to myself, I need to buy this. Right, the S&P 500 is not moving lower, the Dow's not moving lower. The market, this is if volatility is providing us a great dip to buy here, right? BTFD. So let me show you the fill here. It's a pretty decent trade. Came in with 2 contracts. Wait, not chart trader. That's not the right one. Where is the data series? That's the one. Text and markers, please. Right there. So let me just minimize this again. And right there, 59.61.45. Now, I know it doesn't look like much here in the in profile view, but when I show it to you guys here in hybrid view, it looks pretty nice, right? Buying the low and selling it at this area up here of resistance. I tried to see if we could break out above it, go back into value. We had value area up here around 95. We didn't quite get there, so I sold it at 77.50 from 61.75. That actually comes out to about 15.75 points of total profit here in the NASDAQ futures, and on 2 contracts comes out to about, we'll round it here to $800. Sorry, $600. 800 would be the 20 points. Comes out to about $600, and not too bad. I always get called a little bit crazy, Raul. Why are you buying the NASDAQ? The NASDAQ's moving lower. Look at all that selling. And I mean, plain and simple, just because it looks scary to buy doesn't mean you shouldn't buy it, right? As long as you know where to buy and where to sell, you should be okay, right? So we had some value here, right? So we had support. The market profile told me, hey, there's some support here. Market traded down to that level, immediately bounced back, and created an opportunity of, at its very best, it was up 24 points. Okay, at its very best, it was up 24 points. At its very best. Okay, I didn't quite steal the 24, but I took about 16, so that's not too bad. Then, of course, this is all Fed related. This big drop here. We could have tried to find some value down here, but I figured I don't want to. Like I said, I don't want to play the indices. I want to play gold. I want to play the euro. I want to play all these other markets. So that was the trade here in the NASDAQ. And then here in soybeans, I've been going over market profile charts here of soybeans lately, and we wanted to sell 76 to 78 for the second time this week. We tried to sell it here. We tried to sell it here. So for the second time this week, we tried 76, 78, no cigar. And we tried buying 64 and 60 again, to no avail. The market just sort of traded in its own range here. Mostly a P-shaped distribution here, but one of those top heavy ones, so no trade there in the soybean market. Anyways, guys, that's really all the time I have for today. I hope you guys enjoyed this video. If you did, make sure you guys click like there, those of you watching on Facebook Live. And leave us a comment if you have any questions in the comment section below. And I also want to invite you guys to the website, www.themarketprofile.com. Claim your 14-day free trial of the Market Profiles live trading room, my live trading room, where you'll watch me trade the market profile every single day, manage positions, analyze profiles, and I also teach market profile trading every single day live from 8 a.m. to 12 p.m. and then we do this daily market summary around 4, and swing by, check us out. It's free, no harm, no foul, right? If it's something you like, obviously we could talk about furthering a membership. Anyways, have a great evening, everybody, and I will see you all tomorrow.